Good morning and welcome to the XM.com weekly market update. And with me again is Peter Maguire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
Welcome to another week. Huge amount of data last week, which we probably can't cover all of it today, so we'll get through parts of it. The Aussie dollar, wow, talk about a turnaround.
Turnaround, absolutely. Well, there you are on the chart, 65, and it's bounced to 67, 67 odd. And I think there's probably more upside. That US dollar's coming under a lot of pressure and US dollar sell-off. So we go on a ride and let's see if it's got the capacity to take 68 out.
Yeah, you would think so. We'll talk about the US interest rates shortly, but the Reserve Bank governor's come out and more or less said interest rates here will stay as they are till at least the end of the year.
100%.
So that's going to increase the pressure on the US dollar and interest rates there. Employment numbers came out last week as well, pretty stable actually. So there was nothing too out of the ordinary. That unemployment rate crept up slightly, but still around that 4.3%.
Yeah, noticing a little bit of hardship as far as companies, as far as downsizing, and that can't be denied. So it's going to be interesting again, lead up to Christmas. Is there going to be a hemorrhaging or are they going to stay with these current numbers? And there is hurt on Main Street, inflation and all of that taken into consideration. It's pretty tough out there.
Over to Japan, there's been a huge amount of activity there in the last few weeks. The GDP numbers came out last week at 0.8%, which was a little bit stronger than the market anticipated, which is obviously a good sign.
A good sign, yep. And, you've only got to see what their stock market did last week, just as another subject, but it was up 8% for the Nikkei, so that's extraordinary. But, it's been volatile.
But interesting there, those three previous numbers were negative numbers in Japan for the GDP, so 0.8 is actually a pretty good rebound.
It is a good rebound.
Yeah, the yen, once again, huge amount of activity over the last week or so. It's settled a little bit around that 146.5 mark.
Yeah, it was 162 on about the 11th of July, and then as anyone can see, that chart down to 145, like boom, and then you've about 11% fall, and then it's bounced all the way to 147. It's giving up a little bit of that hot steam, but it's been a dynamic trade, Andrew. I mean, if you traded, I keep on saying it, if you traded only one market, the yen, that's why it's so hotly traded, and Mrs. Watanabe loves it.
Plenty of activity.
Yep.
Over to the US, interest rates, they're pretty much pricing a guaranteed 25 basis point cut in September. As I think you were sort of saying, roughly 55% of a 0.5%.
Well, 60% I understand from a probability as far as we've got Jackson Hole this week in Wyoming. It's going to be interesting what Fed Chair Powell says and the rhetoric coming out of there. Every single word and comma and full stop will be analysed. You know that, you're laughing, you know it's true. And then at 60% probability of a 50 basis point cut in September. And are we going to see 110 wiped out of it by December? That's what they're saying. So there's no, now I think there's a meeting in October and I wouldn't have thought they'd do something there from a rate cut perspective because of the election. We had a lot of fireworks ahead of us.
Yeah, like you were sort of thinking that's the election at the moment seems to be from an interest rate perspective is put on the back burner to a certain extent. So
certainly for this next 24 hours, 36 hours.
Yeah, definitely. So, but plenty of activity. Obviously, we're getting towards the end of earnings season, which has been pretty reasonable again. There has been some mixed results, but it's been more good than bad.
Well, if you want to talk about it, I mean, here we are. We had the S&P 500's through 5,600. It's probably less than 1% from its all-time high. You've got the Nikkei, the Nasdaq was up 1.4% overnight. Dow was strong. You can't say that it's in a recessionary mode if you're looking at as far as performance of the stock market. And you even had the stock 600 out of Europe. That was up over 2.5% last week. I mentioned Nikkei. So it seems to be, showtime. Yeah,
and I think any talk of recession, like realistically, it's just ridiculous at the moment. The equity markets are strong, inflation's coming down, and the GDP is running at 2.8%. It's not even close to a recession.
No, not yet. And I'm not saying you're going to see one. Let's just see how the numbers drop. But I'm expecting we've got a couple of things on our horizon that are certainly left of field, and that's the geopolitics that seems to be gathering steam globally. One can't deny it. So let's see what impact that has to the markets over the next couple of months.
Yeah, and just a quick look, a busy chart here, but those markets after that sell-off in the last week or so, they have recovered to a certain extent, not in totality, of course, but you wouldn't have thought you just can't drop anywhere between 5% to 10% overnight.
Or 20.
And recover within a day or two.
Well, that's right. I mean, the one to really watch there is the lime green, Nikkei 225, and you saw the peak of it, and it really was, extraordinary. and it hit an all-time high, and then the wind just dropped straight out of it. But it did recover, and it has recovered to an extent, and I wouldn't be surprised for that choppiness to remain.
Yeah. And
I wanted just to say to everyone, if you are trading, you must please look at some form of insurance in the sense of hedging. Because if you're trading stock markets and you're naked, in other words, you're only bullish, you're going up, or you've got a position, please look at, and that's physical stocks, look at a hedging mechanism to actually, if something blows up, because it's prudent for every trader to be in a hedge position. I'm just sharing that from a risk management perspective.
Yeah, not having that, particularly if you're a short-term trader, it's pretty risky.
Yeah, or if you're holding physical stock and you're thinking, well, it's actually, I've got to lock in. I've had a great gain. I don't want to let those evaporate. It's far easier to just take a hedging position for, it might be 3 months. Keep the stock, and if it costs you X, that's the cost of doing business.
Yeah, for sure. But we'll keep an eye on things. There's been plenty of data out of Europe as well. We'll touch on that next week.
And we've got Eurozone PMIs, Bank of England, UK PMIs this week, and you've also got CPI coming out of Japan.
Yeah, so no shortage of data.
No, and look, man, this once in a year Jackson Hole, Andrew, is a big event, and that every trader needs to be conscious of that. And because that really has some sweeping changes to the economic footprint, and what you're talking Fed Chair Powell.
Yeah.
So I just strap yourself in. Could be a bumpy ride.
Yeah, but as you said, really keep an eye on the commentary coming out of that meeting.
Every single word.
Yeah, for sure. All right, we'll keep an eye on that and touch base on that next week.
Look forward to it.
Great, thanks, Pete.
Thank you, Andrew.
And that's the weekly update from xm.com.